What if you could get like a direct line into the strategy of a huge global tech company, understand what they're doing right, what the challenges are, without wading through pages and pages of financial reports?
Yeah, just get straight to the point.
Exactly. That's what we're doing today. We're taking a deep dive into Sea Limited, the Singaporean tech giant behind Shopee, Monee, and Garena.
Hmm.
Their second quarter 2025 results just dropped, and, well, there's a lot to talk about.
For sure. And our mission here really is to cut through all the jargon, pull out the insights that actually matter, and sort of connect the dots between their different businesses.
Right.
We want you to walk away understanding not just the numbers, but the strategy, the innovations driving their growth, and what it means for you, whether you're a consumer, a small business owner, or just interested in tech.
So yeah, if you want to get up to speed quickly on a really major player in the global internet scene, this deep dive is definitely for you. We'll start big picture, overall financial health, then we'll zoom right into the three main engines: e-commerce, digital finance, and gaming. See how they're doing, what's next. Okay, let's jump in. The big picture. Sea Limited kept up its strong start to 2025 in Q2, right? How are things looking overall?
Well, what's really striking is the scale of the growth, but also, crucially, the push for profitability alongside it. Their total GAAP revenue, that's the standard accounting measure, hit US $5.3 billion.
Wow, 5.3 billion.
Yeah, a really solid 38.2% increase compared to last year. And gross profit, that jumped even more, 52.1% to US $2.4 billion.
Yeah.
And this led to a net income of US $414.2 million, which, that's a huge leap from about US $80 million in the same quarter last year. Massive jump.
And what about adjusted EBITDA? That often gives a clearer sense of the core operations, right?
Exactly. It strips out some of the non-cash stuff. So total adjusted EBITDA reached US $829.2 million. That's nearly double the US $448.5 million from a year ago.
Double.
Yeah. And the really key thing for you, the listener, to understand here is that all three core businesses, Shopee, Monee, Garena, they've all been EBITDA positive since the second half of last year.
That's significant.
It is. They're not just growing anymore. They're consistently bringing cash each quarter. This shows a real disciplined strategic shift away from just growth at all costs towards profitable, sustainable growth. That's a big deal for them.
Okay, so a strong overall picture. Let's dive into Shopee then, the e-commerce side. Hearing it was another, quote, record-breaking quarter. What are the numbers telling us?
Well, Shopee's GMV, gross merchandise value, the total value of stuff sold, that grew 25% year-on-year in the first half of 2025.
25%.
Yeah, and they expect that momentum to just keep rolling into Q3. Gross orders hit 3.3 billion. That's up 28.6% year-on-year.
3.3 billion orders.
Billion, yeah. And the GMV for the quarter was US $29.8 billion, up 28.2%. E-commerce revenue itself, JAP revenue, was US $3.8 billion, up 33.7%. Okay. And the core marketplace revenue, fees and ads, that was up even more, 46.2%.
Those are some really strong numbers. So what's driving this, especially while they're also focused on making money, not just growing?
It's really a combination of things. Advertising revenue is a huge piece of it. The number of sellers actually using their ad tools, up about 20%.
Okay.
And the average amount those sellers spend on ads per quarter, up over 40% year-on-year.
Wow.
And this isn't just happening passively. They have a dedicated ad tech team improving algorithms, using AI, making the ads work better. They actually saw an 8% lift in purchase conversion rates from these efforts.
So the ads are getting smarter.
Exactly. And they improved their ad take rate, that's the slice of GMV they get from ads, by almost 70 basis points year-on-year. But here's the interesting part. Even with that improvement, it's still only around 2%.
Only 2% compared to others.
Yeah, much lower than peers. So what that tells you is there's still a huge runway for growth in ad revenue. It suggests profitability improvements are kind of baked into their model going forward, not just a one-off.
That's a really interesting point. Okay, so beyond ads, what else is clicking for Shopee?
They've been really consistent on three operational priorities. First, price. Their slogan, cheaper, faster at Shopee. That focus led to over a 10% year-on-year increase in how often people buy. Second, service quality, especially logistics. They've cut the cost per order, and they've made deliveries faster.
Faster.
Well, get this. They piloted instant delivery in Indonesia, getting orders to people in as little as 4 hours.
4 hours? Seriously?
Yeah. And now they're expanding that to Vietnam and Thailand. Think about that experience. Plus, they're using smart demand forecasting, pre-shipping stuff closer to buyers, which makes it all more cost-effective.
Okay, that's impressive. And what about keeping buyers loyal? It's a tough market out there.
Right. Their Shopee VIP membership program, it's a paid subscription, is doing really well, especially in Indonesia. GMV from VIP members there grew almost 50% just quarter on quarter.
50% Q on Q.
Yeah. And here's the kicker. VIP members bought about 30% more each month after they subscribed. And they stick around more, about a 20% higher retention rate.
So it changes behavior.
Definitely. It creates that stickiness. And they're rolling this out now in Thailand and Vietnam. Already hit 2 million subscribers across those markets.
What about their content ecosystem? We hear a lot about live streaming and video.
Yeah, it's a big engagement driver. Turns browsing into buying, basically. They're even using AI tools to help sellers make high-quality videos easily without needing a fancy studio.
Wow, interesting.
And it works. In Southeast Asia, orders coming from live streams and short videos made up over 20% of their total physical goods orders.
Over a fifth. Wow.
Yeah. Plus, their partnership with YouTube is booming. Over 7 million YouTube videos now have Shopee product links in them across Southeast Asia. That's up over 50% quarter on quarter. Huge organic reach.
Okay, let's switch gears slightly. Brazil, we know it's a massive market. How's Shopee doing there?
Brazil is quite the success story for them. They just hit their 5-year mark there. And incredibly, they're now the market leader by order volume, growing fast and profitably.
Profitable in Brazil already. That's fast.
It is. Monthly active buyers jumped over 30% year-on-year in Q2. They've cut logistics costs per order by 15% and slashed average delivery time by more than 2 days.
2 days faster on average.
Yep. And in Greater Sao Paulo, think about this. 1 in 4 parcels delivered next day, 40% within 2 days. That's up from single digits last year. Massive improvement.
Okay.
They've also added over 100 well-known brands, moving into higher value items, bigger basket sizes. Helps attract, more affluent customers too.
But Brazil's competitive, right? How are they handling rivals, especially when others tweak things like free shipping?
It's a great question. Competition's definitely intense. But even when competitors adjusted free shipping rules, Shopee said they didn't really see an impact on their growth.
Really? Why not?
They point to their cost structure, especially in logistics. They believe it's just fundamentally lower than competitors, even for the faster shipping options.
So they can absorb it better.
Seems like it. The pricing stays super competitive. And they keep adding sellers with higher priced goods, which might be less sensitive to small shipping changes anyway. The key takeaway for you here is just that relentless focus on fundamentals. Cost, service, price.
Makes sense.
And, beyond the business side, there's a cool social angle in Brazil. They mentioned over 8 million Brazilians have become digital entrepreneurs through Shopee.
8 million?
Yeah. And like 30% of their active sellers, they started selling online with Shopee. For over half, Shopee is their main source of income. That's a pretty deep impact.
Definitely. Okay, let's move from e-commerce to their digital finance arm, Monee. How's that side of the business looking?
Monee had a really, really strong quarter. Both revenue and adjusted EBITDA grew over 50% year on year. So JAP revenue was US $882.8 million, up 70%. Adjusted EBITDA was US $255.3 million, up 55%.
70% revenue growth.
Yeah, huge. And their loan portfolio is just expanding incredibly fast. Grew over 90% year on year. It's now at US $6.9 billion total.
Okay, $6.9 billion in loans. That's big.
It is. That's split between US $5.9 billion on their own books and about US $2.9 billion off book, meaning funded by partners.
With that kind of rapid loan growth, you always worry about quality, right? How healthy is that loan book?
That's the crucial question. And remarkably, despite the speed, their NPL ratio, non-performing loans past due over 90 days, stayed stable and healthy at just 1%.
Only 1%. That's really low for this kind of growth.
It is. It speaks to pretty strong risk management. They also added over 4 million first-time borrowers just in Q2. And the total active users for their loan products topped 30 million for the first time. That's over 45% growth year on year.
And is this growth coming from everywhere or just one or two markets?
No, it's nicely spread out,
Right.
diversified,
Wait.
which is good, right? Reduces risk. Malaysia's loan book, for example, crossed US $1 billion. That's their third market to hit that milestone after Indonesia and Thailand. And Brazil also showed really strong growth. People are adopting both their pay later product and their personal cash loans there.
So what's Monee's secret sauce? How do they grow so fast but keep risks apparently so low?
They talk about 3 key advantages. First, the deep integration with Shopee. All that shopping data gives them insights, right?
Okay.
Second, just a massive user base that's building a credit history with them over time, lots of repeat data points. And third, they're increasingly using AI to fine-tune their credit models constantly. These things together really boost their ability to underwrite loans effectively.
Can you break down their main credit products quickly?
Sure. Three main ones. First, on Shopee Pay Later, using it to buy stuff on Shopee. GMV penetration there is in the mid-teens, percentage-wise.
Yeah.
They push things like a 1-month interest-free option, tiered pricing for better users. You can even ask for a higher limit if you show income proof, which helps them get more prime borrowers. Second is off Shopee Pay Later, using it elsewhere. That's growing well, too. In Malaysia, they integrated with the national QR system, Do It Now, so you can use Pay Later easily in physical stores.
Into the offline world.
Exactly. That part grew over 40% quarter-on-quarter in Malaysia, already over 20% of their Malaysian Pay Later book, and they just launched something similar in Thailand with PromptPay. Big potential there. And third, personal cash loans. Those nearly doubled year on year. They basically cross-sell to Pay Later users who have a good payment history. Still seems like a lot of room to grow that product.
How is their approach to fintech different in Brazil compared to Asia? Any specific adjustments?
Yeah, a couple interesting things. In Brazil, they combine the limits for personal loans and Pay Later into one single limit, which is different from Asia.
Okay, why?
They didn't explicitly say why, but likely simplifies the user experience or fits the market better. They also pull in more external data for risk assessment in Brazil because more data is available there.
Smart adaptation.
Yeah. Plus, they got an SE license, initial approval for a CFI license. These are regulatory things that let them operate more broadly and access better funding in Brazil. And they're partnering with external lenders, too. All that's driving growth. Pay Later penetration in Brazil. Still only single to low double digits, so huge runway there, too.
Okay, fascinating stuff on money. Let's round this out with Garena, the digital entertainment arm. Where C Limited originally started, right? How did gaming do?
Garena kept up its strong momentum, too. Bookings, that's like the revenue equivalent for gaming, up 23% year-on-year to US $661.3 million. Adjusted EBITDA also up 22% year-on-year to US $368.2 million.
Solid growth.
So solid. In fact, they actually raised their forecast for the whole year. They now expect bookings to grow more than 30% in 2025.
Raising guidance mid-year is usually a good sign. Which games are driving this? Is it still all about Free Fire?
Free Fire is definitely still the core engine, but multiple key games showed double-digit growth. Free Fire, Arena of Valor, EA Sports FC Online, Call of Duty Mobile.
Okay, so broader strength.
Yeah, but Free Fire is still massive, over 100 million average daily active users globally, and still growing well after 8 years. That's incredible longevity for a mobile game.
8 years is ancient in mobile gaming. How do they keep it fresh?
Well, great example is their 8th anniversary update. They launched a new map called Solora. It cleverly mixed nostalgia, brought back an old iconic train with new stuff, like a full map slide reel feature that totally changes how you move and strategize.
Shaking up the gameplay.
Exactly. And players loved it. It launched mid-May, became their best-performing new map ever. Shows that smart innovation works.
Beyond new maps, how else are they boosting engagement, getting players involved?
They added a new camera mode. Makes it super easy for players to snap photos or record videos of their gameplay and share them.
User-generated content fuel.
Precisely. Within a month, the average daily shares of in-game stuff grew almost 4 times. That's massive free marketing and community buzz, right? They also did big IP collaborations for the anniversary, extending into July, like with Netflix's Squid Game and Naruto Shippuden. Said the initial response was really positive.
Okay, now this sounds really interesting. AI in gaming. How is Garena using AI? What could this mean?
Yeah, this is potentially game-changing, excuse the pun. They're using AI in 2 main ways right now. First, behind the scenes, in development, it speeds things up massively. AI can help generate high-quality original art for new maps, new items, much faster, and with more variety than humans alone.
So faster content pipeline.
Exactly.
Oh,
It boosts
yes.
productivity. But the second way is maybe even more profound for the gamer experience itself. Free Fire is social, but lots play solo. So they're experimenting with AI bots that can act as your teammates.
AI teammates.
Yeah, or even coaches. Give solo players a taste of teamwork, maybe encourage them to team up with real people later. Helps keep players engaged. But here's the bigger picture they're exploring. Generative AI. Letting players create their own content within the game, moving beyond just playing the preset experience.
Whoa, like building your own levels or something.
Potentially, yeah.
Yeah.
Or customizing experiences in deeper ways. The vision is much more immersive, interactive, personalized gameplay. It's still early days, they stress that, but they're really pushing the boundaries of what a game could be.
That sounds like a fundamental shift. What about completely new games? Are they launching anything else?
They've mentioned they are committed to trying new genres, new markets. They have games like Delta Force and Free Cities in early stages, still tweaking them.
Okay.
But honestly, the confidence behind that raised full-year guidance, that seems to be coming mostly from Free Fire, just continuing to outperform and grow strongly. So innovating, yes, but the current strength is still rooted in that massive hit.
Okay, so wrapping this all up, we've gone through the financials, Shopee, Monee, Garena. What's the big takeaway for you, the listener, from this deep dive?
I think this look at Sea Limited's Q2
Mhm.
really shows a company hitting its stride with a clear strategy. Profitable growth across these different digital areas.
Hmm.
You see Shopee innovating in e-commerce and logistics, Money expanding financial services pretty carefully, and Garena keeping its gaming core strong while leaning into AI.
Right.
It shows how tech can serve huge numbers of people, adapt locally, and deliver strong financial results. It's quite a balancing act.
Yeah, that balance really stands out. It's not just about getting bigger anymore. It's about growing smarter, sustainably.
Exactly. And their use of AI, it feels like it's becoming really embedded, not just a buzzword, in ads, in risk models for loans, in game development and engagement. It points to a future where AI isn't just a tool they use, but a core part of their competitive edge and how they create deeper experiences for users.
So, maybe a final thought for you to chew on. As companies like Sea Limited weave AI this deeply into everything they do, how might that change what we even mean by a tech company in the years ahead? Not just for us as consumers, but for all those businesses that depend on these platforms. And that brings us to the end of this deep dive into Sea Limited's latest quarter. We hope this gave you a clear, insightful, and engaging picture.